Welcome to the Deep Dive. Today we're plunging into the fascinating currents of the Southern Arizona real estate market. We'll be focusing sharp on the numbers for June 2025. We've pored over the latest detailed reports from the Multiple Listing Service of Southern Arizona, we'll call it MLS-SAZ, and we've also got specific data from the Tucson Association of Realtors, TAR, and the Green Valley Sahuarita Association of Realtors, or GVSR. Our mission here is pretty straightforward. Cut through all that raw data, pull out the most important nuggets of knowledge. We want to give you a real shortcut to being well-informed about what's truly happening right now in Southern Arizona's property landscape.
Yeah, and what makes this deep dive particularly valuable, I think, is just how current these reports are. We're looking at data as of July 7th, 2025, so that means we have a really fresh snapshot of activity, of pricing trends, which is, absolutely crucial in a market that moves as fast as real estate can.
Okay, let's unpack this overall market picture then for Southern Arizona, starting with those big numbers from MLSAZ for June 2025. What's the broad stroke? What's it telling us about how things are shifting?
Right, okay. So looking at the MLSAZ quick stats for June, we definitely see a noticeable shift. Total sales activity came in at 1,343. Now, what's significant there is that it's down about 14.2% from the previous month. So that suggests a bit of a cool down in buyer activity, month over month at least. Year over year, it's down a smaller amount, about 3.0%.
Okay, and what of the supply side, listings?
On the supply side, new listings were 1,889. That's also down about 14.8% from May. But interestingly, it's held fairly steady compared to last year. It's actually up just a tiny bit, 0.3%. So sellers are still listing roughly at last year's pace.
Gotcha. And pricing, that's always the big question.
Pricing, right. The median sale price for Southern Arizona was $360,000. That's a minor dip, less than 1%, 0.55% from the previous month. And it's essentially flat compared to last year, 0% change.
Wow, flat year over year.
Yeah. The average sale price, which, can be swayed a bit more by high-end sales, that was around $436,175. Similar small dip month over month, down 0.83%, but it is showing a modest 2.2% increase year over year.
Okay, and market speed. How fast are things moving?
That's where we see a definite slowdown. The median days on market, or DOM, it increased to 35 days. Now, that's up 6 days from last month, and it's up a significant 13 days from last year. So homes are definitely taking longer to sell.
13 days longer than last year.
Yeah. And negotiation-wise, the average percentage over asking price was actually negative, minus 1.86%. It remained in the buyer's favor.
The buyer's getting deals under list price on average.
On average, yes. And finally, just to round it out, total volume was just shy of $586 million, down a little under 1% year over year, and the average price per square foot was $227, which is pretty stable, up just 0.4% year over year.
So putting that all together, it sounds like we're seeing maybe a slight cool down. Fewer sales, homes taking longer to sell, but prices are holding relatively steady, especially that median price. What I find particularly compelling here, though, is the inventory side. You mentioned listings holding steady, but what about the total amount out there? What does that signal?
Right, the inventory picture is critical. Across MLSSAZ, we currently have 5,440 active listings. Now, when we pair that with the sales pace we just talked about, it translates to about 4.05 months of supply.
4 months, okay.
Yeah. And typically, anything under 6 months is still considered a seller's market, technically. But it's trending upwards from where it has been. It gives buyers a bit more breathing room, a little more choice.
Right, more options.
Exactly. New pending sales, which is a good indicator of sort of fresh demand coming in, were 3,318. And if we break this down by property type, single-family residences, SFRs, they make up the biggest chunk of active listings. That's 4,356 of them.
Makes sense.
But what's really telling, I think, is how much that months of supply figure can vary depending on the price range. It's not uniform at all.
Okay. How so?
Well, for instance, if you look at homes priced at $1.4 million and above, they have a much higher supply over 10 months, 10.25 to be exact. That indicates a significantly slower market for those really high-end luxury properties.
10 months is a lot. Definitely a buyer's market territory there.
Absolutely. But then, in sharp contrast, you look at the $200,000 to $299,000 range. That's much tighter, just over 3 months of supply, 3.09 months. So this really highlights that while we talk about the market as a whole, your experience as a buyer or seller is going to feel vastly different depending on the specific price point you're operating in.
That's such an important distinction to make.
Okay,
let's narrow our focus then. Let's see how these overall trends play out in the specific submarkets. Tucson versus Green Valley, Sahuarita. This is often where the real nuanced stories unfold, right?
Absolutely. These regional differences can be quite stark sometimes. So if we look at the Tucson Association of Realtors, the TAR data for June, they saw 1,204 sales. That's slightly down year over year by about 1.8%. Pretty stable, really.
Okay. And the median price in Tucson?
Median sale price for Tucson was $365,000. And again, remarkably flat, barely dipped year over year, minus 0.1%, so holding very steady there.
Interesting. What about days on market in Tucson?
Median DOM in Tucson was 33 days. Now, that is a notable increase from last year, up 12 days, so mirroring that overall trend of a slower pace.
Right.
And similar to the overall market, Tucson homes closed at an average of nearly 2% under asking, minus 1.89%. Active listings stand at just over 4,800, giving them exactly 4.00 months of supply.
So Tucson looks pretty aligned with the broader MLSAZ trends, maybe just slightly stronger on price stability.
Largely, yes. But what's interesting within Tucson is looking at property types. While overall sales were slightly down year over year, single-family residence sales were actually up a little, 1.3%, and manufactured homes saw a very significant jump in sales, up over 35% compared to last June.
Wow, 35% jump for manufactured homes in Tucson. That's substantial.
It really is. Now, let's compare that picture to the Green Valley Sahuarita Association of Realtors data, GVSR. They reported 139 sales. That's a much sharper decline year over year, down 12.6%.
Okay, big difference from Tucson stability.
Big difference. And their median sale price was $323,200. That also saw a more pronounced dip, down 4.1% year over year.
So price softening there, unlike Tucson.
Exactly. Median DOM was longer, too, at 45 days. That's up 15 days from last year, even slower than Tucson. And the average percentage under asking was close to minus 1.6%. They have 624 active listings, giving them almost 4.5 months of supply, so a bit more inventory relative to sales than Tucson.
Okay, so slower sales, lower prices, longer time on market in Green Valley, Sahuarita. But did you say something about listings earlier?
Yes, this is what's truly noteworthy for Green Valley Sahuarita. While new listings actually surged by 20% year over year, meaning way more homes came onto the market compared to last June, sales and median prices both declined significantly.
Huh. So more supply hitting the market, but demand didn't keep up, leading to price drops.
That seems to be the story, yeah. And we saw some substantial drops in specific property types there, too. Townhouse sales were down slightly, about 3%, but condominium sales plummeted over 44%, and manufactured home sales fell over 42%. Remember how manufactured homes are booming in Tucson? Opposite story in Green Valley.
Wow. That's a truly diverging narrative, isn't it? Between Tucson holding steady, maybe even seeing strength in some segments, and Green Valley Sahuarita seeing more listings, fewer sales, and a noticeable price dip. It's almost like two different stories playing out just miles apart.
Yeah.
What do you think drives such a clear difference?
It really highlights the importance of, localized market dynamics. The overall MLSAZ trends are just a blend, an average. And as we just saw, when you dig into specific areas, specific property types, you uncover the real nuances. Green Valley, for example, might be experiencing a different supply-demand balance. Maybe it's related to its demographics, specific community features, buyer preferences shifting. It leads to higher inventory and that price softening we saw.
Makes sense.
And it reminds me, if we look back at the MLSAZ data for those really large homes, remember, the 5,000 plus square foot ones, they had a unique situation too. Their total sales volume was down, yes, and the median price change year over year was a substantial drop, like minus $300,000.
Right.
But their median days on market was incredibly low, just 4 days.
4 days. For huge houses.
4 days median. And yet, surprisingly, they actually sold for, on average, over 2.5% over asking price.
Okay, that is weird. Fast sales over asking, despite a huge median price drop year over year. How does that work?
It's unusual, right? It suggests perhaps a very specific, maybe niche demand for those unique, very large properties. Buyers might be willing to act incredibly fast, maybe even bid up slightly if the right property comes along, even if the overall median for that category has adjusted downwards compared to last year. It's a reminder that the general market isn't always the full story for every segment.
That's fascinating. It really underscores how specific segments can operate almost on their own rules sometimes. Okay, let's unpack the buyer demand section a bit more.
Yeah.
Particularly the days on market and that percentage over or under asking price. These numbers really tell us how competitive the market feels on the ground.
Definitely. If we look at the longer-term trends for days on market, you can see a general upward movement across the last few years in the charts. It indicates a market that's slowed down overall. Properties are just consistently taking longer to go from listing to contract compared to the peak frenzy.
So that 35-day median for MLSAZ in June fits that pattern.
Exactly. It's a noticeable increase from previous years. And when we examine the percentage over or under asking price, the data consistently shows the market closing under asking recently. For MLSSAZ as a whole, it was about minus 1.86%, and in Tucson specifically, roughly minus 1.89% under list.
Suggesting buyers have regained some negotiating power.
Absolutely. More so than in the past couple of years, for sure. Now, if we dive into buyer demand by price range for MLSSAZ, we see some interesting things. The $300,000 to $399,999 range that had the most sales over 430 transactions in June. Homes in this popular middle segment had a median DOM of 39 days, a bit longer than the overall median, and closed at an average of about 1.3% under asking.
Okay, so pretty typical for the current market feel.
Right. But then what's intriguing is you look at the $1 million to $1.19 million range. These homes had the quickest sales. Median DOM was just 16 days.
16 days for million-dollar homes. Faster than average.
Much faster. But they also saw the largest discount relative to asking price, averaging 4.5% under list.
Huh. That seems counterintuitive again. Quick sale usually means high demand, maybe even bidding wars, pushing prices up, not down relative to asking.
It does seem that way, doesn't it? But what we might be seeing here, or what this data could suggest, is maybe sellers in this specific price bracket are pricing aggressively right from the start. They might be aiming for that quick sale, pricing it compellingly to attract immediate offers, perhaps because they're highly motivated.
Or maybe the buyers are very specific.
Could be that too. A highly motivated, specific buyer pool looking for very particular luxury properties. They know what they want, and if the right house comes up at a price they see as reasonable or even slightly discounted from what they expected, they jump on it fast.
That level of detail, digging into price points and types, it's exactly what makes these deep dives so valuable, I think. It helps you understand not just the headlines, but the underlying currents affecting individual deals. So let's try to wrap our heads around this. What have we learned from this deep dive into Southern Arizona's real estate market for June 2025? We've definitely seen an overall market cooling, right? Fewer sales, longer days on market, even though new listings held steady year over year.
Right. A shift towards a slightly more balanced market, maybe.
And we also spotted those really fascinating regional differences, like Green Valley Sahuarita showing that notable price dip and sales slowdown, even though listings surged there. Quite a contrast with Tucson's relative stability, especially on median price.
Yeah, and we've also seen how buyer demand and seller behavior, too, really varies significantly by price point and property type. It's such a clear illustration that the market isn't this single monolithic thing. It's really a collection of many smaller, dynamic micro markets, each with its own story playing out. You know, think about those large luxury homes selling super fast but with a bigger discount, or how manufactured homes were booming in Tucson while really struggling just down the road in Green Valley.
Absolutely. So for you, the listener, this data can really inform your perspective, whether you're thinking about buying, selling, or maybe just keeping an eye on the economic landscape here in Southern Arizona. Understanding these nuances is key. And here's maybe a provocative thought to leave you with, something to mull over. Given these shifts we talked about, the increasing median days on market, that consistent trend of selling prices falling slightly under asking across the board, what does this really suggest about the evolving power dynamic between buyers and sellers here in Southern Arizona as we move deeper into 2025? Where's that balance shifting? Thanks for diving deep with us today.